Welcome everyone to another presentation, and this time we're going to do it a little bit different. It's going to be about cryptocurrency, blockchain technology. Here today we have Erin, who is a student analyst and community leader within Romero Mentoring, and she specializes in cryptocurrency. So this is meant to give you more of an understanding and explanation into this space, and I'm very excited because it's actually going to be a learning opportunity for me as well. So with that being said, Erin, how are you?
I'm good. How are you? I'm super excited to be here today, and cryptocurrencies and blockchain technology is one of my passions, so I'm so excited to talk about this.
Excellent, great. And as I'm sharing my screen here, I know that you've put together a couple of slides to go over and give us an explanation on your finding, your research relating to crypto. So why don't we start with your first slide that you've created here? You know, what is Bitcoin? And then we can dive into the other slides that you put together.
Yeah, so Bitcoin was created by Satoshi Nakamoto, which is a pseudonym. We actually don't know who this person is. It also could be a group of people, but Bitcoin is a cryptocurrency, which means that we cannot physically hold it like a dollar bill, for example. So the purpose of Bitcoin is to make sure that there is no central organization or government behind it. So Bitcoin is all decentralized and it is based on the technology behind it. So some cool things to keep in mind: Bitcoin with the capital B focuses on the entire network, and Bitcoin with the lowercase b refers to just the unit itself.
Okay, so that's interesting. So Bitcoin with a capital B refers to the entire network, and Bitcoin with a lowercase b refers to the actual currency. Okay. Now, is this universal? Is this widely understood by traders or market participants that focus on cryptocurrencies?
I think most people who do their due diligence on Bitcoin will know the difference between Bitcoin capital B or Bitcoin with a lowercase b. But I feel like since there are more retail investors now, they might not know the difference.
Okay.
But it's good to know if you read about it.
Okay. And I also see if I specialize mainly in equities, right?
Mm-hmm.
And I see here 21 million were basically issued. If I use the same principles from stocks, I will assume that 21 million would be shares outstanding for a stock. But with crypto, this is the most, is this just the float of how many might be available? And then 18 million have been mined out of 21 million. Can I make that comparison?
Yeah, you can make that comparison, but the main difference is that for Bitcoin, you have to mine it. So the 21 million coins aren't already issued out. It's not in the open. For example, with stocks, we know that for some companies, they might have like millions of shares out there, but you won't have to mine them. So for Bitcoin, we only have 21 million. That number will not change. And I think it is actually closer to about 19 million coins being mined so far.
So far, okay, good. Now let's continue here. In this slide, you're showcasing the chart of Bitcoin, and it definitely has experienced just a parabolic move, right? It's just gone straight up. So can you help us better understand the sequence of events or the news that led to this major pricing? I mean, this is over 200%, right? From 20,000 to 60,000. Yeah, this is a huge increase. So put some color into this price move.
Yeah, so the first parabolic move for Bitcoin was around 2017 when we saw that Bitcoin reached its previous all-time highs, almost hitting $20,000. So this is when the US and a lot of governments started to really notice Bitcoin, and more people were starting to learn about it. Since then, the Bitcoin price has dropped a little bit. I think its low since then was around $3,000. But over the past 6 months, I would say, really in the winter of 2020, we saw more people putting their money into Bitcoin. And that is mainly because we saw entrepreneurs like Elon Musk pumping this. For example, in the past month, we've seen Tesla accepting Bitcoin. More companies are actually implementing the ability to pay with Bitcoin. And also more governments, for example, outside of the US, they started to actually regulate this. Not really with China, not really with the US yet, but smaller countries, because it's easier for them to really track everything.
Mm-hmm.
Yeah.
Okay, interesting, interesting. And I assume in the upcoming slide, we could talk a little bit more about the actual utility and the real value of cryptocurrency and the blockchain technology. So I see in this other slide, difference between banks and Bitcoin. What's the main takeaway for the audience in our community?
Yeah, so for a bank, all transactions are actually recorded, but you know who sent who what money or what amount. But for Bitcoin, since everything is anonymous and each user is actually basically a line of code, you don't really know who sends who what. And that is something that I feel most people value about Bitcoin. They want that anonymity because they want to make sure that like they wouldn't really feel tracked. So
Okay. So you have anonymity into this, but what about the some of the challenges, or if you take the other arguments, some of the critics when it comes to Bitcoin or the blockchain, when they are talking about uh, crime, criminal organization and enterprises using Bitcoin to promote illegal activity or fund illegal operations using Bitcoin. There's no transparency. There's no track record for that. What is the argument that the crypto or the blockchain community has against that? How do you make it safer so that criminal enterprise organizations are not taking advantage of the secrecy or the anonymity that you've just mentioned?
yeah, I so in the past we've had a situation called the Silk Road, which is actually mentioned in a few slides ahead. But basically, people were using Bitcoin on the dark web to buy, sell drugs and other illegal activities, which is very scary. But the government cracked down on that and they actually seized a lot of Bitcoin. But for Bitcoin itself, I feel like there's no way around illegal activity just because everything is anonymous. However, everything is tracked on a ledger. So I feel like if the government really wanted to regulate it, they would be able to maybe make some connections. But as of right now, we don't have anything that will, I guess, help track all these illegal activities.
Okay. I think once governments start to dive deeper into this, which I think they've already started to do.
Mm-hmm.
I know the US Fed is looking into it as well. And within the brokers or the gateways, the organizations that track your purchasing activity, like a Robinhood, for example,
Mm-hmm.
like a Coinbase, for example, I've noticed that they are identifying, or you have to verify your identity when you open an account with any one of these brokers, if you even want to use that term, to see who is conducting that activity. So that's one way for the government to track what you're doing or what transactions are being recorded, right? They can provide that information to the government. So I see that they're already starting to do that. Is that the best solution? I don't know. I guess we'll have to wait and see. But let's just continue here. So Bitcoin within banks, I think what you're displaying here obviously is just more confirmation from other major banks on what they're starting to do with crypto. Okay. Goldman Sachs. Okay, this is interesting. I also saw, have you come across the article where Goldman Sachs already started to launch, they launched actually their own cryptocurrency desk?
Yeah, I think they actually had a cryptocurrency desk a few years ago during the first Bitcoin rally. But I know that quote unquote failed, which is why they actually closed the desk. And I think they're trying to start it again.
Okay, interesting. Okay, so help me better understand this slide, innovation from Bitcoin.
Yeah, so there are two main solutions that stems from Bitcoin, which is the blockchain, which we will be focusing on, and also proof of work, which I don't have a slide on, but I'll just kind of briefly explain what it is. So for a miner, they have a few roles, but one of them is to verify all transactions using something called proof of work. So once they get a transaction on a ledger, they will try to solve this quote unquote complex math problem. And that is what proof of work is. Once a miner can actually verify that that transaction is legit, then it will be posted and the miner will actually be rewarded with some sort of Bitcoin. And this is something that the community recognizes. And this is why Bitcoin is considered secure, because there's an incentive for miners to really verify all transactions and why proof of work works.
Now, how difficult the level of or the level of complexity, how much more challenging and difficult it gets as more people start to mine to get the last amount of supply from let's say, for example, Bitcoin? How much more difficult do they have to, or how much more computing power do they have to spend to mine whatever remaining Bitcoin currencies are there?
Yeah, so in the beginning stages of Bitcoin, it was relatively easy for miners to mine Bitcoin. That's mainly because Satoshi Nakamoto, he, she, it, I'm just going to refer to it as a he, but he really wanted to issue as many Bitcoins out there as possible in the early stages so that people can actually trade it. But from then, we've actually seen that it is harder to mine Bitcoin because if you are a retail miner, for example, you are competing against companies that have thousands of miners. They have data centers dedicated to this. But the more you mine, can be more difficult for you to obtain Bitcoin just because there's a smaller amount of it. And also the difficulty of the quote unquote math problem changes based on how fast or how slow a miner will be able to obtain that Bitcoin.
Okay. Now I'm still going through some of your slides here. So recap unique properties of Bitcoin. Okay. So programmable, secure, anonymous, timestamp, distributed, immutable. Okay. Is there anything else that you will add to this slide?
No, I think the 4 bullet points really sums up the properties of Bitcoin and why it works and why people favor Bitcoin. You can also make the same argument on the other side, but these are the ones that I focus on.
Okay. Now this is an interesting slide in terms of scandals and problems. Okay, so you have drug scandal. We touched on that a little bit. Bitcoin theft. Okay. Bitcoin fake bombing. Bitcoin structure. So how will you address these scandals? How do you, I mean, for someone like myself, I don't trade crypto. I'm starting to learn a little bit more about this, obviously from yourself. So I'm getting a little bit more informed. Some of the skeptics out there, it's related to this. When you see these type of press releases, what would you say to skeptics when they see these type of scandals and reports?
I think with all forms of currency, there will be a scandal, or I want to say theft. With the US dollar, we have bank heists in the past. But for Bitcoin, one of the biggest ones was really the crackdown on the Silk Road. But from then, we've actually seen that more platforms started to emerge from that. So it will be harder for the FBI or even the government to really track all that down. And people are just becoming more sneaky about it. I think people use Bitcoin as a leverage for a lot of these situations because it's easy for them to obtain money. But yeah.
Okay. Now, this is an interesting slide too, because now you're putting into perspective how big this space is. Okay, so it's, wow. So currently the cryptocurrency space, $2 trillion?
Oh, this was on May 13th. Today is May 27th. It's actually around 1.72. There was a recent crypto sell-off. So it's actually closer to 1.72 trillion.
I mean, that is still significant. And then I see here that the stock market is worth 95 trillion. Is this I would assume this is on a global level.
Yeah.
Is that a global number? Okay. So crypto, 1.7 trillion, the stock market, 95 trillion. Okay. And then I see here the market cap for each of the major cryptocurrencies out there. So Bitcoin almost $1 trillion, 930 billion. And again, like you mentioned, this is from May 13th. So this number might be slightly lower. Ethereum, Binance market cap, XRP, okay, and Dogecoin. Dogecoin, 53 billion, huh? Okay, okay. And the largest one in here is Bitcoin. So Bitcoin is like the US dollar of cryptocurrency.
Yeah. Most people usually compare Bitcoin to gold because there is a scarce amount of Bitcoin, but I wouldn't necessarily compare it to the US dollar, and I don't really think Bitcoin will ever replace the US dollar. I think it will just sort of complement each other in the far future.
That's a good point. That's a really good point. Okay, so let's continue here. Initial coin offering, ICO. So help me understand a little bit more on what's an ICO.
Yeah, so there are two ways to really have your own crypto out there. There's a crypto coin, which usually uses the initial coin offering process. And then there's also something called a crypto token, which is a bit different, but we won't go into that today. But for an ICO, it's kind of the same process of an IPO. You would try to get a lot of funding behind it. You would try to get investors behind your own coin before you kind of issue it out, kind of like a stock.
Wow. Wow. I think in principle, a lot of the same process will still apply, right? Within the stock market and the cryptocurrency space. It's just another asset class.
Mm-hmm.
Okay. Wow. It's amazing for me to see how big cryptocurrency has gotten. You know, when I first learned a little bit about it, it was back in 2010. 2010, about 11 years ago. And this wasn't as massive as it is now, but I think it's the power of the technology and all everything that promises that has attracted now a lot of investors, and it's become a lot safer, and it's just its own asset class. Wow. Wow. It's a digital currency of the internet.
Yeah.
Wow. Wow. Unbelievable. So how mining works?
Yeah, so this page focuses specifically on mining. I mentioned a bit earlier that it's pretty hard for just an individual miner to actually obtain Bitcoin now. You can obviously mine altcoins, but for Bitcoin, it's actually a lot harder now since you are competing against mine farms and also other companies. But for these, you would really have to have top-notch GPUs. I know a lot of miners, they actually use NVIDIA GPUs, but they just come out with their own crypto mining processors called the CMPs. So that's pretty interesting.
Wow, look at the computing power. Now, what about, I've seen some headlines relating to how harmful these crypto farms are actually becoming to the environment. Any developments from the crypto community on how to make this sustainable where it's not really harming the environment?
Yeah, so I know in New York itself, I think they are actually using old coal plants to actually mine crypto, which is pretty interesting. About the electricity, these mining farms are actually producing more electricity than some countries, which is really, really scary. And also just the carbon emissions behind it is also degrading the environment, which is also why Tesla stopped accepting Bitcoin because of the environmental damages. But I think more people, more crypto companies are becoming more aware of it. So moving from proof of work to proof of stake will actually be better for the environment. That is something I believe that Ethereum 2.0 will be working on. And we've actually seen third gen cryptos like Cardano and also Polygon work on something like this.
Wow. Wow. Just to give you a little insight into how I think when it comes to human nature and humanity, we can be so creative and we can invent new things like crypto, right? And the digital currency of the world, but we all have blind spots. And now we're starting to see how harmful and destructive this thing can be to the environment. So it's like, okay, now we got to slow it down and figure out a better way of doing this. It's just humanity, I guess, adding their own way of ingenuity to create and solve problems. And then, you find a solution, but then you create another problem. And if you just study it as an experiment, from the outside looking in, it's quite remarkable and a little bit perplexing on how we come up with these things.
Yeah, I think when I first started to research about Bitcoin, I still think that this is kind of like a revolution. And I was like, wow, we can maybe eliminate like the dollar bill. Like this can maybe help the environment. And then the more research is thrown out there, the more we realize like how degrading this is for the environment. But I'm still a pro for crypto, but that is definitely a huge concern. And there's a huge debate about it going on right now.
Yeah. Look, yeah, I mean, now we're getting a little bit more into a philosophical debate on crypto versus fiat currency. And you have to go back and look at history, and you have to look at every empire, right? The rise and falls of every empire, the birth of fiat currency, how long does it last? Why are those currencies diluted over time? How far does the government agencies that print these currencies, to what extent do they do it to obviously to maintain their empire, to continue to finance it? But one of the things that, I noticed with cryptocurrency, I don't think if there is some sort of a crisis where we get into a recession and the most vulnerable parts of the world population, right? How would you get cryptocurrencies to the most, again, vulnerable parts of society, right? People that are making less than $1 a day. How do you get cryptocurrencies to those people that need a form of currency to buy their daily meal to feed their families? I mean, many of these people don't even have access to a computer. So how is cryptocurrency addressing that big part of humanity, where at least with fiat currency, they know how to exchange it, right? They know how to deal with that. So have you seen that other perspective when it comes to cryptocurrency and how they can solve some of these problems?
Yeah, there is a very small number of actual like people trading Bitcoin and people who are into crypto. Although this market is huge, very few people actually know what it is. So especially for the people who don't even have access to the internet, for example, they won't even know that this exists. But I think there are a few projects out there that uses blockchain technology to help a lot of these smaller and also poor communities with housing. We can definitely link an article about that in the description below, though.
That's good, because it's like the more advanced part of civilization, the more advanced part of our society, could be 1% of the world population that focuses on this. They're moving so much faster than the other part of the world, where you guys are 10 years ahead. Whereas other segments of societies are 5, 10, 15, 20 years behind. How do you get those people to the forefront so that everyone moves along with you and we can solve a lot of these problems together and not create obstacles, barriers where other people look at this as a threat to their livelihood, to their system of doing things, right? Again, these are just things to discuss. Again, it's more from a philosophical perspective. So I see here ATM. So ATMs now being popped up at a global level, different parts geographically. I see, wow, so there's a lot in the US, these type of ATMs.
Yeah, you can actually just put your money in there, your fiat money in there, and then create your own Bitcoin account, and then they'll actually deposit that Bitcoin into that account.
Okay, so this is an actual practical application to having access to the Bitcoin market, where if you have a card, you go to one of these ATMs and you can just convert your Bitcoin into cash, into a currency.
Yeah.
Okay, good. Bitcoin wallets. Now, what is a Bitcoin wallet?
So for Bitcoin wallets, they basically store your Bitcoin. But since Bitcoin is basically a code, you don't want to ever lose that, because once you lose that chain of code, you'll never get that Bitcoin. So there are actually two types of wallet: a hot wallet, which is connected to the internet, and a cold wallet, which basically means that you either have it written down on a piece of paper or you even memorized it. So those are the two differences. For Bitcoin wallets, you can actually trade Bitcoin with other people. There is a difference between Bitcoin wallets and also Bitcoin exchanges, what we will see on the next slide. So that is something to really keep in mind.
Okay, popular Bitcoin exchanges.
Yeah, so for Bitcoin exchanges, you don't necessarily own that Bitcoin. So for Coinbase, you can buy your Bitcoin. However, if I wanted to send you a Bitcoin, like what Bitcoin is meant to do, I won't be able to do that. I'm basically holding on to that Bitcoin, but I can't trade it.
So explain that to me. So for example, with Coinbase, right? Let's say I open an account with Coinbase. I deposit, let's say $1,000. I could probably buy a fraction of a Bitcoin or any other cryptocurrency. I cannot send another person my cryptocurrency, whatever I have in my Coinbase account, to someone else. I can't take it out of the Coinbase network.
You cannot.
What?
When you buy crypto on these exchanges, you're basically buying it just for your own portfolio. You're just holding on to it like stocks, but you cannot trade it. And I think that's something that a lot of these exchanges lag. I feel like Bitcoin was really created so that you can have this peer-to-peer transaction,
Yep.
but for a lot of these exchanges, yeah, you actually can't trade with people.
Okay. So now the system, the network, like a Robinhood, like a Coinbase, that they're the ones who are now storing the actual cryptocurrency, but you as a user, you can buy it from them and it would be in your account and their ledger, but you cannot send it to a private individual outside of their network.
Yeah.
Okay, interesting. So that's how the government will be able to access and see people's transaction and activity. Okay. Interesting.
Yeah, for a lot of these exchanges, you actually have to verify your identity. Like you have to give your social security number so that it's easier for the government to say, oh, you owe us this amount for taxes.
Okay. Now, what is this in terms of blockchain technology today?
Yeah, so the main purpose of using blockchain technology is really to verify all transactions. And I feel like you can use that in almost every sector you can think of. So for here, we have the financial services, healthcare, agriculture, and also entertainment. And on the right side, I just have like a brief explanation on how we can actually implement a blockchain tech system in there and how it's already being used.
So, if I'm looking at a cryptocurrency and I'm, again, looking at the principles from a stock perspective, as an equity analyst, I care really about the growth of the business, top line revenue growth, bottom line earnings per share growth, margin expansion, and there's a lot of different tasks or elements to growing the business, right? You have marketing, you have distribution channels, you have their advertisement, right? It's a machine. When you're looking at cryptocurrency, what's the marketability or the usability of a brand new crypto that just went through an ICO? Would it be that they are being used in all of this area?
So if you were to create your own crypto and let's say it's reputable and a lot of people know what it does, for example, for Bitcoin, so some companies might actually accept that as a form of currency. We've seen that with Dogecoin recently, but for this itself, it only focuses on blockchain tech. So this is blockchain tech outside of crypto. So it's not even connected to a coin. It's really how a company might be able to implement their own blockchain to verify all transactions.
Okay, and then I take you on the security side. Okay.
Yep.
But if you have a brand new crypto and you do an ICO, let's say for example Dogecoin, right? Because that's one of the meme cryptocurrencies. I'm looking at this digital currency space. If Dogecoin is being used in e-commerce, for example, 1,000 different businesses are accepting Dogecoin. Then you have global payments, not just only geographically in the US, but now it's at a global level. Remittances, peer-to-peer lending. Now people start to use Dogecoin to do their own lending. And then also microfinancing. Does Dogecoin check all of these different categories that you have listed right here?
I think Dogecoin is actually used for e-commerce and also peer-to-peer lending. I'm not too sure about global payments. I know people are using it globally, but I don't know how many businesses actually accept it. For microfinance, I feel like it's a bit niche, so it'll be hard to really track that. But
now, from a framework to evaluate and analyze a cryptocurrency, is this a good framework to think about? Is the cryptocurrency being used in commerce or e-commerce? Is it being used at a global scale? Is there remittances going on with this cryptocurrency? Is there peer-to-peer lending? Is it doing microfinance? And lastly, how many people are actually using it? Would that be a good framework to check if this is a cryptocurrency that perhaps can increase in value? And is it something that should be owned in a portfolio?
Yeah, I think it's very important to really know if the coin that you are invested in can be used outside of, for example, just sending it to other people. So if you can actually get your own crypto, for example, to be accepted by other companies like Tesla, I think people will realize like, wow, this coin actually has value to it. And then hopefully it can be adopted even more within society.
Okay. Yeah, because I'm thinking again, as an equity analyst, I have my own framework. I have my own guidelines on how to evaluate a stock. But when you're looking at a cryptocurrency, how do you evaluate it? How do you analyze it? Would this be perhaps the beginning framework or the foundation on what you need to check in order to analyze a cryptocurrency to say, hey, this is a buy. This thing has potential to increase 5 or 10x fold over the next 24 to 36 months.
Yeah, this can definitely be one of the ways we can actually value a crypto besides just looking at how many people are actually trading it, like what's the volume and like what is the price at. We can see if it has like real world applications to it outside of just buying and selling, for example.
Okay, good. Now, to wrap this up, I think the last part I would like to do in this segment is go over quickly a couple of stocks right here. Right, because and the first one is Dogecoin. I mean, I know there's been a meme crypto, but it definitely increased significant from 10 cents to 75 cents. I think at the top, that's 7-fold, and now it declined. In the backs of the entire crypto market, just declining as well. Let me pull up also Bitcoin. Now, what's your take on Bitcoin or cryptocurrency in general? Are you bullish? Are you bearish? Well, what's your take on this market?
I am bullish on the crypto market. I feel like although we've seen a huge sell-off recently within like the past 3 weeks, I'm still bullish on it. I think there's a long way to go for crypto. We are living in history right now. I think there's a long way for us to really adopt this, but I'm bullish on crypto.
Okay. Yeah, I see from a technical analysis standpoint, just purely reading price action, reading charts, there was a consolidation period here from about March to May, and then not enough support, not enough buyers to sustain a $60,000 price level on Bitcoin. So decline, this is almost a 50% drop, significant. But when you look at the bigger picture, where is this coming from? Let's look at a monthly. I mean, it's due for a pullback. I mean, look at this huge move to the upside from 8,000, whoever got in the name, definitely patting themselves on the back if they experience this entire move to the upside. But nothing goes straight up, right? Nothing also goes straight down. If you just use simple technical analysis principles, right, things move in waves. The first wave to the upside, profit taking comes down, then the second wave to the upside, then again, profit taking, and then continues. But within each wave, When it increases and decreases, you need to understand the fundamentals. You need to know the story. You need to know what is the driving factor. Remove emotion out of the equation and focus on the fundamentals. There's a market bell. Focus on the fundamentals and also apply human psychology, because at the end of the day, all of this stuff is human that are making decisions when they're buying these stocks. And some people make irrational decisions, especially at these levels coming in at this high. So yes, this was expected, okay? And you're saying that you're still bullish, so you do expect a bounce from this and maybe another move to the upside, another wave to the upside in the months and years to follow?
Yeah. I just kind of want to explain why we had a sell-off to begin with. So one of the biggest companies like Tesla actually stopped accepting Bitcoin as a form of payment because of the environmental damages that we talked about earlier. That was one of the catalysts. The second one was really China announcing that they don't even see crypto as an asset class. And China actually hosts around 70% of all the crypto miners. So it took a huge tank. And that's just some of the reasons why people are now selling it. I still think Bitcoin and the overall crypto market might decline a little bit, but in the long run, I think it still has a long way to go.
Okay. So and I'm pulling up Ethereum as well.
Mm-hmm.
Wow, this is, yeah. You can see the large accumulation of buyers coming in Ethereum. They came in here, right? So previous high, breaking that resistance level right here this month, that month. That was in January of 2021. A large number of buyers came in, or market participants,
Mm-hmm.
and they rolled this thing to 4,500 and so. And obviously profit taking, the people that got in early, selling it to the people that are getting in late. And whoever bought at the top, 4,000, they are in some pain, but the question is, can they withstand the decline? And if you're a longer term bull, does this crypto, Ethereum, does it have the potential to go back to 4,000 or maybe 8,000 or 10,000? Have you done some analysis to calculate what would be a price target on Ethereum over the next 2, 3, 4 years?
I have not, but for Ethereum, it is quite different from Bitcoin. So Ethereum actually is a company. You can use their blockchain for your own company. You can run their blockchain. You can have your own crypto on it, actually. So they actually have Ether. And I feel like in the long run, it will have more applications to itself compared to Bitcoin. So Bitcoin is just a coin itself, but Ethereum, it has real world applications to it. I don't have a price target for Ethereum. I read a few articles and they have a price target of $10,000.
10,000?
Yeah.
Over what period of time?
Over the next year.
12 months.
Mm-hmm.
Okay. All right. Good. Look, I think this has been very insightful, informative for me. I'm not an expert in this area. I'm still starting to understand it and learn it. So I do appreciate you putting your presentation together and giving us more information in the space. Any final thoughts or comments before we wrap up our session?
If you do invest in crypto, be very, very cautious. Don't dump all your savings into it, even though you might think that it will double. Be very skeptical what you read online. Yeah, that's it.
Yeah, I think applying a healthy dose of skepticism and applying prudent portfolio management principles is a way to go. And for example, 5-10% of your portfolio in one asset class. I think it's a good way for you to prevent you from getting hurt. And I know this is targeting a younger demographic, a lot of high school and college students. And when you're young, you want to be aggressive. You want to make money fast. You want to be rich in your early 20s. But just be careful. The same way I was like that when I was in my earlier 20s, it's just a recipe for disaster, because most younger market participants haven't experienced the market cycles. You haven't experienced the ups and the downs. And just applying prudent strategies that have worked in the past. It might be slow at the beginning. It's not sexy, it's not attractive, it's not flashy, but over the long run, as it compounds, then you'll see the results. Slow and steady wins the race. This is not a sprint, it's a marathon. All right. All right, Erin, I really appreciate it. Thank you very much. And with that being said, thank you, and I'll see you guys in the next one. Take care.